Hello guys, Steven Lux here. Welcome to this video. So today I'm gonna go over a couple of the chart patterns that has changed in the last month. I have fixed some of the criteria for the patterns as well. This month pattern has been very choppy, also very messy. There's not many profitable plays, but let's take a look into it. Let's get into the video. We had several of the bound short that tick around into resistance, but doesn't create a decent amount of range. So let's go over the first one, which will be TOP. Resistance will be at June 5th. So you can see there is consolidations between 9 to 950 going into today, consolidated between I would say 8 to 850. So shorting underneath the resistance is not a bad idea, but the range that it created today is very close to 50%. As we know that when we are shorting into resistance, the minimum range that needs to be created has to be 50%. So this one has just met the minimum criteria. Second, whenever you are looking at to short into a resistance, you don't want the volume to exceed the resistance volume, right? You traded about 20 mini shares before the momentum shift, which is on this candle. The volume itself already overwhelms the resistance volume, which we take a look at right here, will be around 14-15 million. So volume is overwhelming the resistance volume. That's why you can see the stock curves all the way back. Number one, it's not very ideal, shorting that the stock only met the minimum criteria. Second, the borrow rate were very cheap. I think it's around 1 cent to 2 cents a share. Number three, the resistance itself is not very solid. Only 14 million shares traded, I would say 10 million shares traded in the consolidations. The total amount of dollar being traded on the resistance, it's around 90 million. And we traded about more than 90 million in this consolidation. This is one of the, I would say, better examples because this one actually cracked down when it ran into resistance. But whenever the volume is overwhelming, it's cheap borrows and it barely meets the minimum range. Let's take a look at the other two bound shorts. So the first one we have is UCAR. This is another bound short. Stock running into resistance happened in June 21st. First of all, stock runs all the way up to 9, started around 550, so very similar range compared to TOP. This one went to 890, this one went to 919, so both of them spiked about 50%. You can see that when the stock is very cheap borrows and it's trading massive amount of volume, and you can see it did not really drop by the end of the day, and the fading percentage on the pattern itself is about 50%. So whenever you are shorting into those very tight range bound short, you always want to cover, before it is 50%. If you top tick, and it's I would say relatively difficult to top tick if the stock is going up on a strength. And once it chops around, it's very difficult to manage your size. Whenever you want to size in and want to add after a momentum shift, your average typically gets drawn down by your adding size. Then taking your profit, it's going to be a very tight range and not going to make much of the reward on the chart. Another one we have, which will be OCEA. This one also had its bound short, traded about 40 mini shares in June 21st. Let's take a look at the May 23rd resistance. We have consolidations between around 10 to 12 going into the last 15 days, 2-3 minute chart. So we know that the resistance is around 10, May 23rd. Then we had another bound short right here, which will be June 21st. The range itself is between 5 to 8, so it's only up about 40% on this one. I was hoping this one could come back and squeeze a little bit, but it seemed like the resistance is a little bit too hard. So if the consolidation is around 10, then we're looking at about $460 million being traded into that resistance going into short today. But the problem is whenever you run into these type of bound short, if the range is really low, I wouldn't really recommend shorting into this type of pattern, because once the range goes below 50%, there's only limit amount of reward you have. Also, this one's a biotech as well. Biotech, easy to borrow, low float, and tight range. There you always run into various different squeezes. One we had was TOP, and then we had this UCAR. This one chopped around. OCEA actually dropped. Those are the three bound short that we had in the last couple days. All of them produced less than about 50% on the total range. all of them faded about 50% from the top, and the only one that didn't fade, which will be UCAR and including TOP as well. Going forward, I would place the range around 70% on the bounce short. The minimum range on the if the stock tends to spike, it has to be 70%. Once it gets below 50%, you're always looking at the chart now going to be like this. If you didn't control your risk well, you're likely to take a loss on these type of patterns as well. So might as well put your range up higher, miss those tickers, and you can make a lot more reward and much higher winning percentage. So you don't have to be mess around with this chart, and also taking multiple entry and exit because it's keep breaking out the 75% level of the entire panic right here. So that will be all of the bounce short going into the next month. First one, you want to avoid tight range, which will be under 50%. Second, you want to make sure counter resistance. If the current day volume is overwhelming the resistance volume, you do not want to size in too big. Number 3, the minimum range has to be 70%. And also, if the stock is on tight range and also easy to borrow, it's very easy. You will see a chart, squeezes like this. So those are the points you want to pay attention going to the next half of the year. That'll be it for bounce short. So guys, if you have any questions, make sure to leave a comment below, and also make sure to click the like button and subscribe. I'll see you guys in the next one.